Um, Hope you've all been listening to what I've been telling you about the VEPs this week on crypto coins specifically, and Solana and other coins, and what I've been telling you about what's happening since we had that nice, delicious little dip the other day. And basically, what I told you is time frames like the 4 hour. Okay, after the asset dipped below the 7 day third standard deviation band again, we had a nice little drop, and now assets on the 4 hour and the 3 hour and the 90 minute we're all in mean reversion. The 4 hour and the 3 hour still in mean reversion. There is actually a mean reversion to the downside on the 1 hour. Currently, that's around 57K, and that's moving every hour. So there could certainly be some nice movement to the downside. There is a mean reversion to the upside very nicely at around 62 and change K, 62K and some change on the 3 hour, and around 65K on the 4 hour. And that one's kind of meandering over for the next day or so before it starts to tumble down significantly. And when it does, we could see that mean reversion close at a lower price in the 65K area, but it certainly could happen before that, especially if price shoots down and then back up. We could have a very nice swift move to the downside and back up. That's always a probability. It's also a probability that it could just kind of walk sideways and down and complete all those three mean reversions at roughly the same time and area, within some hours or so, or within a day or so, over the weekend or early next month, in early September. So it's days like today when the VEPs told you very clearly from the day start that we had a super tight central daily range on the asset on Bitcoin, for example, of 0.01%. That was the width of the central daily range. So meaning the asset had a central daily range of about 0.01% of the width or of the height of the asset's value. And that tells you that it's going to be a trending day very clearly. And it has obviously been a very nice trending day so far on various time frames. Like 30 minutes, you've had nice trending moves. 15 minutes, you've had nice trending moves, and everything south of that. All the lower time frames, you've had plenty of trending moves. So it's been a great day for scalping. And the beauty of trading with the VEPs is you don't have to be a robot, right? You don't have to jump in and out of trades constantly every second, right? If you have the time to sit and just trade, then, in a proper trading session, 4 hours, 8 hours, whatever you do, then, you can just read the VEPs. And if the VEPs is telling you to stay in the trade, you can do that, right? And even the free chart was telling you with the AVQ, just, when to get in the trade, when to get out for a quick reposition, and when to get right back in for the rest of the ride to the upside. And it has been incredibly effective today, seeing the AVQ telling even the new people who are just learning how to trade with the alpha trading indicators to stay in the trades and get the vast majority of the move to the upside. And of course, the AVP, the alpha volatility percentage, and the alpha trading Pearson correlation that act effectively as one trading indicator. They're like a pair of indicators that act as one. And when you learn the 6 tendencies of probability, and by the way, it also works on entropy, that we include in our volatility and entropy cheat sheet. When you learn those 6 tendencies, and then you know what the probability is of the price action, because the volatility and correlation tell you that when you know how to read them together. And today was a very clear example of that information telling you, even like on the 15-minute or lower, or even on the 30-minute or lower, even on the 1 hour or lower, or the 4 hour or lower. It was all telling you this asset's moving to the upside. Even the daily was telling you today the probabilities are the asset's going to the upside. When you get 2 out of 3 of the volatility reads, let's say the short length and the long length, or the short length and the medium length, it's going one direction, and it's very clear. And the third one is telling you, or not so clearly, that it's going in the other direction. generally you go with the probabilities of what's most likely to happen. And of course, you look at the lower time frames to actually see when to make the entries and exits. And of course, if you have divergences that you see on the alpha laser returns, when they are available. And of course, when you do that, you want to make sure you look at lower time frames to make sure that you get in and out of those scalps on divergences really quickly, especially when you have a trending day like we've had today so far. And you want to make sure that you don't miss any repositions because, like, for example, today, if you would have gotten out at the first peak of the rise, then you would have had to quickly get back in on the next 15-minute candle. So you would have definitely wanted to look at the 9-minute, the 6-minute, the 3-minute, even the 1-minute to make sure that you got in that move to the back to the upside quickly. That way you can beat the market a little bit. But again, you wouldn't really need to if you were to look at the 15-minute and then just zoomed out a little bit. You could have just stayed in it the whole time. If your propensity is not to jump in and out constantly. But of course, if you're a low time frame trader, then you would want to do that. I seem to have lost my connection here. Have I lost my connection? I think I have. All right, well, that's it for now, I guess, folks. Happy trading. If you're still seeing this, I don't know, but if you are, by all means, jump in the Alpha Trading Discord at alphatradinghq.com/discord and grab yourself your free access to our volatility starter pack of indicators and chart. And that's it. See you guys in the next one. Happy trading.